Probably a lot of you are asking yourself, how the hell is possible to have a news like that yesterday? The US GDP shrank 4.8% in the first quarter, biggest contraction since the financial crisis. And that, and that, and that, and that, and that happens in the stock market. Hello everyone, it's Davide here and welcome back to Learning Finance. So in today's video, we are gonna talk about a simple question. Is it too late to buy stocks now? And what it needs to happen to have another market crash? Why is the market continuing to go up? I mean, I think that's driving a lot of people crazy, especially if they missed out the March crash, the crash in March. So let's take a look, guys. So yesterday we had this, and this is what the market is actually doing since the 23rd of March. Okay, so this is the S&P. If you look at Dow Jones, is exactly the same, and boom, here we are, exactly the same. So what happens? I mean, what do we need for another market crash? Because I remember back in the days, there was like online on YouTube a lot of videos about, well, now we are gonna have a little bounce and boom, back again. All those technicals on the technical analysis and things like that. But a lot of people, I think, they missed out because they were, I don't know, probably they have been watching those videos and say, well, you know what, I'm probably gonna wait. Everyone was expecting another drop down, and guess what the market has done? Boom! We don't care about those kind of things, okay? We just go up. That's the story. Sad but true, okay? Anyway, what do we need? I mean, what do we need for it? Because right now it is becoming crazy, okay? So it is too late to buy stocks right now, guys. Well, I have to be honest with you. I am not buying anymore right now, okay? I bought a lot of stocks around here. Probably you have seen in other videos that I made. I bought a lot here about oil stocks, some airline stocks, other different things, and right now I'm not buying anymore. Why? Because I'm a long-term investor and I like to find undervalued businesses, and right now well, there are less opportunities, okay? That's the reality. We cannot deny it, okay? Here there were a lot of good opportunities and here a lot less, okay? So now the next question is, what do we need to have another crash? Because there is still this problem, and those data, they say jobless claim, things like that, everything is bad. This is the first negative quarter. If you do 2 quarters consecutively in negative growth, you have actually a technical recession, okay? So what do we need for the market to go back down? Well, let's take a look, guys. Let's take a look. That's the first one. That's the first one. We are now testing those things, which are, you know, this thing that cannot be named on YouTube. There are like vaccine trials. Okay, they are testing those vaccines. And it looks like they are doing great. Okay, it looks like they are doing great. Now, these news right here are clearly this as well. Are clearly pumping the market. The market loves that. The market loves to think that the problem we had is going away in a certain amount of time. Okay, it's not lasting forever, because our economy is not made to stay shut down, okay? So the market actually loves those kind of news. Now, a first way to have another market crash, if those things are going to fail. Okay, if they're gonna say, well, you know what, we made mistakes with those vaccine trials, we are not able to solve the problem right now. That would be a huge problem for the stock market. Okay, the risk to fall back in this illness disease problem with people home, economy shut down, that would be huge. Okay, in a negative way. And second thing, it would be right now, for example, I live in Europe, and we are starting to, in Germany and in other countries, they are starting to reopen things, something to relax. Okay, phase 2, phase 3, depending on where you live. And another negative stuff that can happen is, if the by relaxing those lockdown, we are gonna have another increase in the numbers of this disease. Okay, so that would be like a second wave of the disease that would be negative. Needless to say, okay, needless to say, that's another thing you have to pay attention to how countries are responding to this relaxation of lockdowns. Okay, the market really pay attention to that kind of things right now, because that's the real problem. Okay, all that problem, it's like lockdown and things like that, the stop of the economy. So if we are able to go away, escape from this problem, it's fine. If the market realize that we are gonna fall back in this problem, well, of course, the risk of another crash, it's really likely. Okay, and the third thing you need to watch is actually this one. Okay, the Fed, they are doing whatever it takes to keep the economy up. Unlimited quantitative easing, checks for everyone, helicopter money, all those kind of things. And probably you're asking yourself, how the hell is possible that we are not having inflation? I see everyone is saying, oh, we are gonna have a huge inflation. You know what's the truth, guys? You know what's the truth? That the real problem right now is not inflation. Inflation is the last problem. The real problem is this guy right here. The real problem is exactly this. The collapse in the quantity of money was the main cause of the Great Depression. As you know, they are printing a lot, but the dollar is still strong, because in those kind of moments there is a liquidity problem. There is no demand for things. Okay, the economy has never been shut down. The US economy has never been shut down in the history, not even in the Second World War. Okay, actually, the Second World War was a good moment for the US economy. They were producing a lot of things, guns, tanks, all those kind of stuff. And this right now has never happened. So there is no demand for goods. I mean, people are just buying stuff like groceries or, well, not much more. Okay, people are not traveling, people are not going on cruises, people are not going out, restaurants are closed, cinemas, theater, hotels, casino, people are not right now taking flights, people are not buying cars, or really, at least the demand has decreased a lot. Okay, shoes, shopping, all those kind of stuff. No demand, and no demand in the economy drives prices down. Okay, drives prices down. So actually, in a period like this one that has never happened before, we don't have inflation, we have disinflation, which is a negative rate. That the real problem is that this disinflation can lead to deflation, and that is the worst thing that can happen in the economy right now. Not inflation, but deflation. And considering the size of the problem, guess what? Those kind of printing money by the Fed is just gonna help to keep this problem of deflation away right now. Okay, so if you're wondering why we don't have inflation, because that's the problem. That's the problem. The real risk is deflation, and those money that are pumped into the economy are helping to have a normal disinflation, but not too much. Okay, completely different it would have been if all those kind of money were pumped in the economy in the positive economic environment. Okay, so in that case you would have had huge inflation wave, but in that case, guys, it's completely different. So what we have to take a look, we have to take a look how the economy, how the inflation is gonna go when those things are getting better. So when the economy comes back to a positive environment, okay, that's when this disease is gonna go away and all those things. This is where we have to take a look. Why? Because I don't know, because it's actually an experiment. We have never lived these kind of things before, okay? But uh, if, and that's a big if inflation goes up in that period, well, the real problem is that if it goes up a lot, which is unlikely, the Fed has to put the interest rate higher to kind of stop, to kind of fight a huge increase in inflation if it happens. Okay, and guess what? A lot of companies, a lot of things, they took loans to go away from this crisis that we are having right now. And if you put interest yield up, it's gonna be a problem because they have to pay more. Okay, and so you're gonna stop the economy and in a very bad moment when you are actually escaping a problem. If inflation is going up in the same time, you are actually going away from one problem and entering in another one, because you are not able to allow the economy to spike up because you have to fight inflation. Okay, but that's, in my opinion, very unlikely. But that's something, okay, you want to keep in mind, because if that happen, of course the market is gonna notice that, and another crash will be likely. Okay, so this is the end of the video, guys. I hope you like it, and leave me a comment below and tell me what you think. Tell me if you missed out, if you wish you had bought more, or if you are fine and you load on stocks in March. Okay, and subscribe to the channel, and see you soon, guys. Have a wonderful day. Bye.